Welcome to The Economy. How do you measure that? The podcast where we explore the fascinating world of macroeconomic statistics, one transaction at a time. I'm your host, Jim Tebrake. Today we're looking at something that affects every household: income. When economists talk about the health of an economy, they often refer to things like GDP growth, employment, or total household income. But looking only at totals can sometimes hide an important question. To help us explore this, I'm joined by Jorrit Zwijnenburg, an expert in national accounts and distributional statistics. So Jorrit, welcome to the show.
Thank you. Thank you. Nice to be here.
Yeah, it's great to have you. So let's start with the basics. So when statisticians like yourselves talk about household income, what's exactly included in that?
So when looking at national accounts, household income, it consists of various items. I think most people will be familiar with the compensation of employees, so the wages and salaries that people earn from their employment. But it also includes other elements such as income from self-employment, such as profit from people running their own business, property income like interest receipts, dividends, rental income. And then also an important part consists of government transfers. So people paying taxes, receiving social benefits like pensions and employment benefits. And all of this together makes up what we call household income in the national accounts.
Okay, so you threw a lot of terms out there: transfers, compensation of employees, property income, things like that. So let's play a game of in and out. I'm going to give you a set of what I think is income. You're going to tell me whether that's included in household income or whether it's not. Okay, so let's assume I have a mutual fund and I've earned some capital gains on that mutual fund. Those capital gains, income or not?
Not income. So in the national accounts, this is all part of the wealth accounts, and any capital gains are considered as revaluations. So you will not find that as part of income.
Okay, so not household income. Okay, I go to the bank, I ask them for a $5,000 line of credit. My bank account goes up by $5,000. Is that my income, in or out?
Again, not part of income. This is not earned by you in the specific reference period. So this is also only reflected in the financial accounts. You can indeed use it for spending in the specific recording period, but not as part of your income.
Okay. Let's assume now I'm lucky enough to retire, and I get a pension. My employer gives me a pension, pays me $3,000 a month. Income, yes or no?
Yes, this is regarded as part of income. Maybe important to mention that there is often a lot of discussion if this is part of your employment income. And then in the national accounts, we see this as part of your income, but not as directly earned from your employment. It's part of the redistributional accounts. So once you go into retirement, you receive this as a kind of a transfer. So it's only appearing in disposable income, as we call it in the national accounts. But I don't want to bore you with even more terminology here. So yeah.
No, that's great. But yeah, so it's not a paycheck in the way we think about it,
Exactly.
but certainly it's still income. Okay. Well, I mean that helps a lot, and I mean it just drives home the point that it's not simple to measure household income. Now household income, that's one of the biggest numbers that we have in the national accounts. So what do we actually learn with this number?
I think household income is one of the main aggregates that you can find in the national account. So there is always a lot of focus on GDP, and GDP tells you a lot about the economic activity in an economy. But if you want to know how households are actually doing and if they benefit from economic growth, it's very important to look at household income. And in that sense, the national accounts provide you an aggregate on how the whole household sector has been progressing, how much income they have earned. However, it still doesn't tell you the full story. It's still important to also look at different types of household groups. So it might be the case that total household income is increasing by 5%, but it might be the case that only a few people experience very large income gains, whereas a lot of the household community might actually be not earning a lot more than the previous year. So it's quite important also to look at the various household groups within the household sector.
Okay, Jorrit, so you explained sort of that one big number, that total household income number, and that's a lot. And I assume that that's not the only thing that you produce as national accountants, that you do something with this number. But I also think it's going to maybe take a little bit of time for you to explain that. So maybe what we'll do is we'll treat that as part one of the show, and we'll have you back next week for part two. So let's take a wrap on this episode of The Economy, How Do You Measure That? And thanks to Jorrit for explaining to us what's included in total household income and all the ins and outs. And we look forward to welcoming him back next week, where he's going to explain how national accountants take that one big number and break it down into different components that give us added insight into household income.